Welcome to ForexTV.com. Today is Thursday, November 6th. I'm Kathleen Reddington with your New York Forex Market Buzz. Taking a look at the latest headlines from the CEP News Desk, initial claims for unemployment benefits in the U.S. were higher than expectations, coming in at a 481,000 reading for the week ending November 1st. However, they were down from the previous week's upwardly revised 485,000 level. Continuing claims for unemployment rose 3.84 million for the week ending October 25th, higher than expected and higher than the prior week's upwardly revised figure of 3.72 million. The U.S. third quarter productivity showed a strange trend, with an output falling and employees working less, yet wage pressures were given to a boost in compensation per hour. U.S. third quarter output fell by 1.7%, while employee hours dropped by 2.7%, and compensation per hour rose 4.7%. Non-farm output per hour rose more than expected by 1.1%. The European Central Bank cut its main refinancing rate by 50 basis points to 3.25%, following through on economists' expectations. The decision disappointed markets, which had shifted in favor of a more aggressive move. And against all expectations from economists and markets, the Bank of England cut its bank rate 150 basis points to 3% this morning, citing the worst global economic crisis in nearly 100 years. Today we are joined by Andrew Busch of BMO Capital Markets. Hi Andrew, how are you today?
I'm doing great.
All right, so you don't even have to guess what my first question is going to be about. The big news today is the big move by the BOE. They went away from expectations and cut rates by 150 basis points. And how is this going to change the game, and what are your moves for the sterling now?
Well, we had an extremely volatile time frame after they cut the interest rates. Sterling dropped dramatically. Euro sterling rose dramatically, and it's all happened within like about a half an hour. They reassessed whether that would be a good or a bad thing for the British pound. The way that I look at this, and the way that I view Europe, including the European Central Bank, is that they are doing what they can do right now, probably not what they necessarily want to do. They have to cut interest rates because their economies are sinking and sinking fast. But it's not necessarily the only thing they need to be doing. Stimulus plans, yes, those are coming, but they need to really look at their credit markets to see how they can get banks and the credit markets working again, and that's really the key for Europe.
All right, well, the ECB remained more hawkish. They had the most catching up to do, and it seemed, and the rate cut, they just stayed with expectations, cutting by 50 basis points. Do you think we'll see them cutting again to catch up, or why do you think they decided to keep it at 50 basis points?
Well, I think they're much slower to react to economic developments. You have to remember this is a central bank that raised rates in the summer, believe it or not. So they're much more reluctant to cut. Their mandate is inflation and inflation only. So until they start to feel more comfortable with that, they're not going to cut more aggressively like the Bank of England has. Although they only cut 50 basis points today, the ECB did discuss 75 basis points, and they certainly intimated that they're going to look at the information coming from their staff to see if it's warranted to continue to cut another 50 basis points when they meet next month. So they're not done yet, but I would say that they're acting in a very slow manner, and it's certainly not going to help their economy in the fashion that the Bank of England did. Overall, these two moves, smack a little bit of desperation. The reason why I say that is that unlike the United States, which has coordination and interaction amongst the U.S. Treasury, the Federal Reserve, and Congress to develop and use tools necessary to ease the credit crisis that's overtaken the economy. In Europe, it's not coordinated in any way between not only between the central banks and the governments. That's why you have the central banks cutting aggressively, but there's not enough coordination amongst the different governments to provide the right tools to, for instance, increase commercial paper issuance. That's one of the problems that's happening in Europe. So, Europe's going to fall behind here, and their economies are going to remain very, either negative or slow growth longer than what will happen in the United States. Therefore, the outlook for their currencies is much more bearish going forward, medium term, because they're more likely to keep interest rates lower for a longer period of time due to economies that stay slower than the United States for a longer period of time.
All right, well, touching on that, we saw the dollar make big gains on the euro this morning. And what would your euro-dollar strategy be now?
Well, it's a little cautious because we're in a about a 500-point range right now between 125 and 130. So I don't think it's necessary to jump right in here and sell euros at 127.30, especially ahead of tomorrow's non-farm payroll numbers. But I would say that if those numbers, they'll probably turn out to be down over 200,000. So I would be looking to sell euro rallies near 130 every time we get up there, and probably take profits down around 125.
All right, and we also saw the yen make gains on the euro today. What is your yen strategy going forward? I know it's been jumpy.
It's tied completely to the value of the euro. I mean, yen carry is really still predominant when it's when we have these equity moves that we're seeing, and in the equities, I would say we're if we look at the Dow trading at maybe a 2,000 point range between 8,400 and 10,400. I mean, I would just play the yen carry exactly the same way. If we get down to 8,400, I'd be buying yen carry. If we get over 10,400, I'd sell it.
All right, Andy, thanks for joining us today.
My pleasure.
This has been your New York Forex Market Buzz with Andrew Busch of BMO Capital Markets. I'm Kathleen Reddington. Join us later this afternoon, 4 p.m. exchange right here on ForexTV.com.